Microphone on. Well, hi everybody. Thursday, Financial Thing live stream. What a day. What a couple of weeks. What a couple of days. Ugh. Investing. Hopefully your mental psyche is staying positive and you haven't made any bad decisions based on emotions. I know there have been people out there on the internet that have, and it's been a tough few days for some people out there in the investment world. But as long as you have your health right, isn't that what counts at the end of the day? So glad you're here. Please hit that thumbs up. We're going to be talking about peer-to-peer lending stuff today, as always, as we do on a Thursday. Next Thursday, put it on your calendars. We'll have Philip here from Landlord Invest. He's going to come and join us as a guest on the live stream. So excited about that. Never spoken to Philip before. Don't really know too much about Landlord Invest, but I'll be doing some research. And if you have any questions that you would like to ask Philip, maybe you're an investor of Landlord Invest, maybe you considering investing through there. If you have any questions, you can send them to me in the Facebook group or email them, help@financialthing.com, and I will present them to Philip. And he has said that he would answer anything he can, and if there's something he doesn't want to answer, he won't, which is fair enough. And he will only be on audio too. He's asked not to be on video, so totally agree to that. It'll be an audio conversation on his part. You'll get to still look at my wonderful face through the live stream, but not his. So cheers to that. But I did want to mention a couple of things that I think are important right now. It would be pertinent to say these things, and that would be no matter what is going on in these financial markets. One thing that I have definitely learned over the last few days is the importance of diversification. And this has kind of smacked me in the face a couple of times. It smacked me in the face with regards to my peer-to-peer lending and the failures of some of the companies that we've seen happen over the last few years. It smacked me in the face again with cryptocurrency and watching the things that have transpired in the last couple of days with the collapse of a high market cap coin from 120 US dollars down to, I think last time I looked, it was a penny or 1 cent, 1.5 cents. Just remember diversification. If you get caught up in these markets and you feel like veering away from your game plan, don't do it. And remember these times that we are going through right now. They're not as bad as everybody thinks they are. If you look at, zoom out of the stock markets, for instance, right now, you'll see they're really not as bad. We've just been in this state of euphoria for so many years with this massive bull run that this kind of dumping of bad energy, bad investment news, these stock market corrections, people are not used to it, and they're not prepared. And I think some people are making some bad decisions, taking on too much risk. I certainly have it in some ways. I'm certainly, I've certainly taken on too much risk in some areas, and I'm guilty of that too. So just for anybody watching out there, whether it's your peer-to-peer lending, cryptocurrency, stock market, be diversified and don't steer away from your strategy, because I think it's going to get much worse, to be honest, what's going on right now. I think actually certainly in the US we're already under a recession. We're already in it. And it's going to really hit some people hard. I think it's going to hit investments hard. That is going to come over into the UK. All the stuff that we have going on was a perfect storm, and we may just start to see this thing topple. So stay diversified, and be careful. So, and if you've lost money over the last few weeks and your investments don't come back, if we look here, the S&P 500 chart. I know this is a peer-to-peer lending stream, but we have to talk about this stuff today because things are looking pretty bloody. If we look at this chart long run, we've had these dips, sometimes pretty severe dips, for 3 years. But over the long run, we can see this pretty happy trail, the S&P 500. I don't know why this chart doesn't go back further than 2000, but if we look way back before then, you'll see this to be true. The FTSE has not quite fared as well, unfortunately. And again, this is the reason why I'm not a big fan of the FTSE 100, but some people are. But yeah, just look at the big picture. Even Bitcoin, we can look at the big picture of where we started down here, even at the spiking point here to where we are now. Here, we're still okay. But there are some bad things going on, like, again, this is important about diversification. We look at Peloton toppling down here from close to $162 all the way down to $13. So, some of these companies could be seen as fads, and be careful, diversify. Don't try to take on too much risk. Our governments have unfortunately put us in this position of us taking on too much risk, I think, at this point. And a lot of people are getting spanked on their botties at the moment. It is what it is. Anyway, let's say a quick hi to everybody on the stream and go from there. We'll take a look at the news. Look at some loans that are on the peer-to-peer lending platforms too. A couple of loans have come out. We're starting to see some action on Assets Capital now. Some new loans flowing through. Alan Brooks is here from Pinner. Middlesex Allen and Basingstokes. John Morgan from a mild Swindon. Peter Vince. Yeah, I will, John. I will talk. I'll just address that real quick because there was something in the news that came out about Coinbase saying if the company went bankrupt, people's cryptocurrencies could be at risk. This was something they had to put in, and they should have done before. They didn't in their terms and conditions, but the SEC put some pressure on them, the regulators. Coinbase has a very strong balance sheet. They have a lot of cash. And they've had some tough times recently, but always, if you can, put your cryptocurrency in a cold hardware wallet that you have control over, because yes, worst case scenario, if one of these cryptocurrency platforms do go under, they could take your crypto with them. Recommended, you've got the Trezor is a good hardware wallet, and Ledger. There's a bunch of videos on the internet about which are the best ones, so just be aware of what the risks are and plan accordingly. Colin is here. John said, is the cold wallet the only way to keep a cryptocurrency safe? It has its own risks, because if you lose the keys and the passwords, then you're going to have a problem. But as long as you back those up somewhere that's safe, preferably on some kind of a metal engraving, or there's some things you can buy out there will allow you to put the first 3 or 4 letters of your passwords in metal into a little case. Because you really only need the first 4 letters. You'll be able to figure it out from there. So I think, what is it called? Ella. Let me see if I can point you in the right direction. I can't remember. I'll figure it out and I'll post it in the Facebook group. There is one crypto company that sells this pretty cool little tool that allows you to store your passwords in metal form, so you're not writing them down. But it really is the best way to keep your cryptocurrency safe. Hi, Colin in the Peak District. Paul New is in Stockport. Stephen in Nottingham. Paul is in Kenilworth. Hi, Paul. Worcestershire, Mr. Alan Stratford. Mike Powell will be paying limited attention due to the football. I don't blame you. I sometimes pay limited attention to myself. Darren in Cambridge is here, of course. How are you? Chimpo Naughty. I wish I'd had enough sense to buy one of those chimp NFTs. There's Bored Ape Yacht Clubs. A friend of mine told me he bought one when they first came out. Bought it for $400 and something, sold it for $225,000. Pretty good. John Cutler, hi. Invest22 in London. Dave Dawson, nice to see you. Patty, Patty, bonjour. Bonjour de la France en soleil, où le soleil brille toujours. The sun is brilliant today, or bright. Brian in Woburn, Dave Ellard in Midlands, Akichak, of course, in Accrington. Yes. So welcome everybody. If you're watching in the future, please subscribe to the channel. Yeah, let's get right into the news. I wanted to take a look at Loanpad. Just, I do that from time to time. I feel Loanpad it's kind of like that comfort safe haven place where I don't really have to worry about it too much. I always like to just kind of take a look at the statistics and see how things are, whether they're growing, staying the same. So here we go. Total loan value, 120 mil. We've got 61 million pounds of total Loanpad loans, which is 43% average loan to value. This live loan number has gone up a little bit. I think we were in the 149 loan number the last time I checked. So gone up 3 loans, I think. Or it might have been 142. So I haven't looked at it in a few weeks. Average loan size gone up just a little bit. It used to be under the 300s, but 405,000 now. Not concerned about that. Approaching 4,000 lenders. That's good. These averages appear to be about the same. Usually what happens in these times of economic uncertainty is people tend not to pour too much additional capital into investments. Maybe they are just keeping their investments stable and pulling out the interest. That's certainly what I've been doing. Estimated time to sell, time to invest 1 day, still at 9 lending partners, and the interest coverage fund at £42,322. And we do have 1 ICF serviced loan. So pretty good. Nothing really to be alarmed about as far as I can see within Loanpad at the moment. Let's talk about some news. Bondura launches an unlimited version of their Go and Grow account. So before it was capped at a monthly cap. So it's become very popular and they've taken those caps off. So it's basically where you can decide how much interest you want to try to target on your account, and then that risk, what kind of loans go into your portfolio, will change based on your risk tolerance. It's an interesting way of doing things. I think that they target about 6.75% on average. I think that these auto positions and these auto peer-to-peer lending products are really just mainstream now. That's what most people are using because a lot of people don't have time to be delving into individual loans. I'm going to log into Mintos in a minute and show you just how many different loans are on a platform like this. And I know it's European, but some people out there are watching in Europe and who can invest through these platforms like Bondura and Mintos. But they are, Bondura has removed those caps now. So if you want to put more money in there, you can. Interesting article from our friend at Bondmason, Mr. Stephen Finley. So, of course, we have had him on the channel before. Been to his office a couple of times. Done a little walkthrough. But he's saying that he believes it's best if you don't call in the administrators when a peer-to-peer company goes under and has problems, Mr. Finley. Of course, from Growth Street, which was able to pay back all of the investors when they decided to go into a wind down situation. The Financial Conduct Authority, let me do that in English. The Financial Conduct Authority last month called for regulated firms to improve their wind-down plans to ensure they have enough cash flow to see them through that wind-down process. Mr. Finley saying what we've seen in the market ranges from some operators staying until the very end to ensure all positions are managed out and funds returned. In other cases, the companies are handed to administrators, with operators stepping back or away altogether. Yeah, and you know what's funny about this? He makes a really good point, because if we look at every single company that's gone to an administrator, the results have been sort of disastrous. But the ones that have handled their own wind downs have fared well. So we can look at Bondmason. We can look at Growth Street. We can look at Lambay. Even though a little different situation, obviously, with what we've seen with the companies that have gone out of business, but the ones that have not turned it over to administrators have done well and managed to repay, for the most part, all the investors. Yes, and I do know it's different circumstances. Mr. Finley goes on to say, unfortunately, where administrators have stepped in due to a lack of case law and precedent around how their services are paid and loan collections can be distributed, we have seen significant proportions of underlying loan recoveries go to funding the administrator and legal fees. I mean, how many times have we talked about this on the channel? You know, what happens when these administrators step in is their fees seem to just keep going up and up and up and up. And it seems to me they really don't have any motivation or incentive to wind up the administration process, because they're being paid hourly in some cases. And they're kind of like lawyers. The longer they can keep the administration processes going, the more the administration company is going to make off for its fees. And it's a problem. I think there should be some regulation around this, some caps, maybe some fixed fees. So Mr. Finley Stephen agrees. Often lawyers are seeking court direction on how to act as appropriate, but this discovery is being paid for by clients out of their investments and returns, not by the former operators or the regulators. More central direction for the administrators would be beneficial for all here. In a small number of cases, such as Bondmason, although technically not a peer-to-peer platform, the operators stayed and managed to wind down the process themselves at their own personal cost. This has yielded a better outcome for clients than if an administrator was appointed. There was no requirement to do this, only a mindset of what this was the right thing to do, something that isn't easily captured in a regulatory business plan or marketing literature. And I think, nothing truer has been spoken, that Bondmason did the right thing. They handled things themselves, cut down on the fees, and managed to pay people back. Administration has not been able to do that. So, what else do we have here? Let me log in here. Let's take a look at a little funding secure news. I don't have a lot of bright news for you today, unfortunately, but this is from the Mouse in the Court blog. Funding Secure faces a new threat over an alleged secret commission payment. This is not the first time this has happened. So a couple of borrowers, Mr. Fahmida Anwar and Roxana Begum, both of Knox Road, East 7 in London, made an application to the High Court in Manchester. Apparently they were lent £78,000, which is a second charge loan against a two-bedroom flat in London. And what happened was, when they took out the loan, they found out that a commission of £11,300 was paid to their loan broker, and that was not disclosed to them. So what they are saying and arguing is that they believe that what they're pushing for is a rescission of the mortgage. So basically they're saying, we want this to be wiped off because this £11,300 commission was not disclosed to the defendants. Apparently, I think we covered this before, the different news story, but this has happened where a broker has taken a commission that was apparently not disclosed. It's tough because it's kind of their word against the brokers. I don't know if this was in writing that this commission was paid and these people didn't read it. You know, I'd say that might be the case. I don't know. I haven't, of course, read the loan document, but that is what is going on with them. So Funding Secure just cannot seem to stay out of the court system. FolkToFolk more than doubles its IFISA take up this tax year. A lot of money has been pouring in. They've received £2.298 million in IFISA funds, a rise from 1.127 million. Of course, FolkToFolk is one of the larger peer-to-peer lending companies in the UK. I believe one of the top 5. So I've been trying to get somebody from FolkToFolk to come on and come onto the stream because I like to talk to them. So I've been in communication with a rep over there. We're going to see if we can make that happen, get them on as an interview. But they've been getting a lot of ISA funds. They've gotten 45.27 million since their July 2017 launch. Of course, as money comes out of RateSetter and Funding Circle and the big ones. HMRC has removed innovative finance permission for IFISA, ISA permission from Lambay. So Lambay, of course, they were one of the first to become authorized to become a ISA wrapper offering on their platform. They got the permissions in February 2017 and then shutting down their retail peer-to-peer site in 2019. And 2.5 years later, the HMRC has formally removed the company's ISA permissions, meaning it cannot any longer offer any tax-efficient retail products, which no surprise there. They have no intention of doing so. But I had a really good experience with Lambay. You know, all the way through, I thought they were a well-run company, and yeah, it's sad to see them go out of the peer-to-peer lending market. Yeah, this company in Europe, Income, who is aiming to become a Euro peer-to-peer giant. They're an Estonia-based marketplace launched in February 2021. They've attracted more than £1.5 million of funds from institution and also a successful Seeders campaign. They want to try to take on Mintos, which is currently, I think, has a 450 million euro loan standing on there, and Income is about 8 million. It's very interesting. I was looking at one of the other places that Income went to get funding, which was on Seed Blink, which is kind of like a Seeders, and they got a 1.2 million euro committed amount. Look at this though, this is crazy. 8.7 million euro valuation. I don't know how these companies come up with these valuations, but there's no lack of investors that want to put their money into these companies and get shares for these startups. You know, sometimes they get taken over or they sell out to bigger companies and these investors do well, but a lot of the times they're just trading their shares on these crowdfunding platform sites. So I don't know anything about Income. Not really on my radar because it's, again, a European peer-to-peer lending company, but they seem, I like their name. They have a great name, good marketing. So I don't know. I never looked at the Seeders campaign, but anyway, they are wanting to become the Mintos competitor. We should, you know what? We should log into Mintos and see how things are going over there, just for giggles. I don't know. Was anybody on the stream a investor of Mintos loans like I was, or was it just me? Let's look at my account. I got barely any money in there now. Just 226 euros stuck in recovery in one because of the auto invest that went into this one company. I think an African loan company. 11.94% annual return. That will likely be cut in half because when this, I would imagine, will go to complete loss. Let's see what kind of loans they have. So if you go up to available loans, they have, I mean, as far as I could tell, they have thousands and thousands of different loans. Again, this is why manual investing is just so difficult. Who has the time to go through all of these loans? This is just one page of loans here. Is that there's 300, and I think there's even more. Look at the interest rates. So 26% pawnbroking loans. Wonder what the lowest is. See what the lowest interest rate is. 5.5%. Still always a lot of liquidity though. See how much the highest interest rate is. Yeah, 26. So if you live in Europe and you want to take the risk of going through one of these European peer-to-peer lending companies, you can score yourself some pretty high interest. Look at this borrower APR though. Pay attention to this, 45%. I mean, somebody's paying 45% probably on an 8-month. I don't know how long the original loan was, but definitely some risk involved there, but you can get some rewards. You don't need to invest a lot to make your money back. But just be careful. See what else. Arch over losses widen if you're an arch over investor. Just know, be aware that they are losing money. Like most peer-to-peer lending companies are. Not unusual, nothing to panic about. You got to really look at their balance sheet and see how much cash they have on hand. But they had an operating loss for the 12 months ending the 31st of December 2021. £648,579, which is actually up from the previous year where they lost 534,000. But they're saying for the fourth year they've grown their lender base and grown their loan volumes. Average loan size, £231,000. 635 loans have been facilitated, up from 579 loans 1 year earlier. I think we have to see these companies, though, make a profit at some point, because how long can you just keep on taking these losses? And those are not small losses, 650 grand. It's not as big as some of the other companies we've seen, like Lending Works and whatnot, but still significant. Always keeping an eye on that kind of thing. Peer-to-peer borrower rates will not change yet, despite change in the Bank of Interest rate rises. This is a question I get asked a lot when the Bank of England puts up their interest rates. Are peer-to-peer lending loans going to pay investors more interest? And the answer is always to be decided. We don't really know, but from what I understand from a lot of the company heads, that to remain competitive, they cannot just start bumping up their interest rates to borrowers and then therefore paying lenders more, because they're competing against a relatively small pool of competition loans within peer-to-peer lending. It's still a niche business. So I don't think you're going to see interest rises on your peer-to-peer lending rates yet. Let's see if there's any interesting quotes in here. I didn't go through this article yet. The average peer-to-peer lender is charging a lot more than a bank, so an interest rate rise of 1% relative to a borrower interest rate of 10% isn't huge in relation to bridging interest rates. 0.25% is not really material, so at least for us, we aren't changing the interest rates for borrowers right now. But if they continue to rise, then we may look to do so. Philip Karadagi, co-founder of Landlord Invest, will be here on Thursday next week live, so don't miss that, 7:30 p.m. He said that following the base rate rise, he would expect the pricing of bridging loans to raise, but with the amount of money and lenders in the space, this has not yet happened. The change of the base rate doesn't affect peer-to-peer lending. What affects us is the pricing we charge for borrowers. We obviously want to make a profit from each deal. If the borrower rate is unchanged, inflation-adjusted returns for lenders will drop. The problem in the UK is there is an abundance of institutional capital on bridging lenders to operate at any level regardless of profit. So what he's saying, again, that boils back down to competition. These peer-to-peer lending companies are fighting against institutional money. So for now, I don't think you're going to see your peer-to-peer lending interest go up. Plend has gained its FCA approval finally. When I was in London in December and I met with Rob from Plend, he was just talking about how he's had this long slog of 2 years of fighting to get this FCA approval. Well, finally, they've gone ahead and got it. So congrats to them, and they can now start deploying loans. Plend has also become the first consumer lender to achieve a pending B corporation status. This is a certification program which demonstrates that a business has a good environment, social and environmental fundamentals, and promotes transparency. Plend is going to use open banking to assess credit worthiness in a fair way to help millions of people who are unable to access affordable credit. Borrowers can apply for loans up to 10 grand, 10 to 25% interest. I think that, yeah, and you can bookmark this, but I think Plend is going to do well in this space. I think with this new way they have of using open banking to assess credit is going to be very fast and fair. And they also have Kevin Allen over there from Rate Setters Risk Officer, West on Kev. If you're on the forums, you probably heard from him, but he's working over there at Plend. And I think they're going to do well. We'll see. I'm hoping they do. I think Rob's got a good vision of how he wants that business to run, and peer-to-peer lending, he has an affinity for it. So might be one for you to check out if you're looking for money to deploy. You want a new peer-to-peer lending platform. Yeah. Plend. Assets Capital Chief Theory is Stuart Law. Warns of 6 months of instability for house builders due to challenging macro conditions. The economy is not looking good. He thinks this is going to be difficult for the house builders in the next 6 months. And I agree. The writing is on the wall. High inflation, higher interest rates. I think the housing market will cool significantly. But there's been a new bill. It's called the Leveling Up Bill. It's a very cool name, very hip. This came through the government yesterday on May 11th, I believe, or May 10th. In the new bill, the government says it will introduce a digitalized planning system. God, about time. It's 2022, and the way government planning goes in building in the UK is just very old. Planning applications will be available on smartphones. Imagine that, smartphones. Isn't that every phone nowadays? Doesn't everybody have a smartphone? Council local plans will have more community input, and legal weight and local design codes will be mandatory, so developers have to respect styles that are drawn up. These things do affect peer-to-peer lending because a lot of these companies are loaning money to house builders. I think it's a very positive thing that the overhaul of the planning system is finally here. We'll see. Law did express concerns that watered-down planning proposals would not be enough to drive growth in house building and create more sustainable pricing for new homes. Yeah, I think we're going to have a tough time in the housing market. I mean, the way the prices have gone up over the last year is just not sustainable, not normal. How long have we been chatting for? Let me look. It feels long. 40 minutes. Okay. Let's keep going. Young Americans seeking out alternative financial investments. This is for your young people across on this side of the pond that they are open to more alternative finance, but they don't know where to start. And I think this has always been a problem, lack of education. They don't know what to do. 42% of millennials, blah, blah, blah. Time for a drink. 42% of millennials and Gen Z say they're already investing in cryptocurrencies, while half invest in stocks and shares. 26% of the millennials surveys said they were frustrated that their bank investments are not generating enough returns. I don't know who invests through the bank. That's a weird thing. Maybe like an app online More than a third said they don't know where to start when it comes to finding alternative homes for their money. Connect Invest found 44% of investors want to generate passive income from their investments, while millennials more likely than baby boomers to name this as a financial goal. So these kids, they want to get income from their investments. Maybe the way to do that is through property rentals. Who knows? Look at this. This is crazy. Gen Z investors are more likely to take their lead from social media, with 47% using YouTube, 29% using TikTok, and 20% seeking out online blogs. 60% of older investors still rely on financial professionals. So this is the changing landscape of the investment world that we live in. And I tell you, I was watching a YouTube stream this morning of a pretty big influencer when it comes to investing. And he was talking on crypto investing. He had a substantial following, hundreds of thousands of subscribers, thousands of people watching him live. And this guy was saying, I'm going to cost average into this cryptocurrency, Luna, that is dropping like a stone. When it was down to 1 cent, he was saying he was going to put more money in. And I was thinking, wow, I mean, just, you got to be careful who you take your advice from. Myself included. You know, this is all informational stuff. Don't do what we say. Do your own research. I know you guys are smart. But when I heard him say that, I thought, oh, this is people are going to actually start buying into these crazy products because one guy who's an influencer said, I'm going to do the same. Bad news. So if you want to read about the planning reforms, if you're interested in that, you can go to the government's website or even this homebuilding.uk website. I'll link it in the description when we're done with the stream. But this gives a pretty good synopsis of this planning reform within the housing industry in the UK. The Levelling Up Bill. It says communities are going to have more say also in planning, new housing targets, digital planning system. And then there's some reforms that are going to be shelved. But anyway, I'm not going to go through all that because it's relatively boring. You can go to the government's website, Google the Levelling Up Bill. You can read all about that. See what else we got. There's a couple of new loans that I noticed came out in LendInvest. And boy, were they snapped up fast. I mean, this company has got, I think they've got it right. I think LendInvest, again, not peer-to-peer, but they seem to be doing right because loans on that platform are just going so fast. This is the LendInvest report for March of 2022. I think I might have already gone through this. I think I did. But it's just showing loans that were written for March 2022, 2.57 million, and on schedule 75%, out of term 19%, and only 6% in enforcement. So it seems like they're on the right track. You'd like to see this on schedule definitely in the mid 80s, low 90%, but you know, it is what it is. They're working on improving that. Let's have a look. I got £1.52 into this very sizable loan. I have mine set up as an auto invest at the moment. I think this is one of the problems that when a platform is seeing a ton of investor demand, you just can't get invested into loans very easily. So this was a £4.7 million loan that it got filled pretty quickly. It went on the 11th of May. And I don't know how long it took to sell out, but it was fast. Pretty much all auto lending, I think, going into this. But they do have another loan coming out. Let's see. Where is it? Let's see if I can find. There was another one that was coming up. Maybe I'm thinking about the wrong platform. Let me see if I can find it. LendInvest. No, this is different. I got the wrong platform. I think it might be. Is it Assets Exchange? I know Assets Capital. Hate the way it logs me out. Let me pull up this loan at Assets Exchange. This is a new loan coming out on Assets Exchange. Upcoming loan. Sheffield. Where are you? I like Assets Exchange. They just seem to have nice. Is that Assets Capital? No, there's one on Assets Exchange too. I don't know, I like Assets Exchange loans. Let's see. I mean, look at these good looking properties. Is that a hot tub? I think that's a hot tub. Just a good looking property. Well maintained. Look at that backyard. I wouldn't mind living there. So, I don't know. They seem to be doing the right things when it comes to picking out their investments. It's a purchase price of £450,000. Current yield 5.1%. Paid monthly. See, when is this one getting released? That is in Swindon. And that's going to be a charity lease. So, looks like a decent loan. You can go through the documents too if you're an Assets Exchange investor and you want to look at the conditions. But I think this looks like a decent loan. They are putting $18,000 into improvements, including fire safety upgrades. The lease will run until 2027 with an initial break in 2024. It's a 6-bedroom detached property. Oh, you can get a 6-bedroom in Swindon for 450 grand, not bad. Further £5,000 contingency is being held for further repairs required under the terms of the lease. There will be a 2-week rent-free period while works are undertaken. So if you're looking for somewhere to put your money in, you can look at that Assets Exchange loan. There's a couple of loans too coming up in Assets Capital, I noticed. Let's take a look at those real quick. Seems like more stuff is starting to flow through. Still a little bit slow. Let me authorize this. Bear with me. Talk amongst yourselves. Come on. I have to try that again. I just got a text from an investor friend of mine who said my individual stocks are RIP. RIP. Rest in peace. Oh God, it's been a tough day for stock pickers out there. Let's see what this one is. Come on. View loan. Come on, Assets Capital. What you got for us? Here we go. Fairhead Homes Limited in Sheffield. This is a total facility of £974,000. I like here too, by the way, the Assets is putting the borrower rate and the lender rate up here in plain view, so you can see they're borrowing at 8.4%. And the lenders are getting paid 7%, so 1.4% spread. Don't forget that Assets does charge a monitoring fee, so don't worry, they're getting paid. They have not been trading for too long, 2 years and 3 months, 65% loan to value. They're going to convert a commercial building along with 2 stories above into 8 apartments. The first charge of £285,000. Is this a... This is probably a tranche, I would imagine, right? 208 if they're only taking 285,000 as a first charge, and they're going to be lending facility of 974. So this loan amount is 86,000. So they're taking a 285,000 pound first charge on a residential development, no personal guarantee, no debenture, but that one is coming up. See if I can see where that is. Nope. Oh, I don't know. That's a different one. Ah, it looks decent. I don't know. Hang on. That's not it. There we go. So are there any documents here? Let's look at the valuation. 123 Queen Street. Where's 123 Queen Street? Let's see. 123. Let's have a look. There we go. Show me the street view. So there's this building right here. I think it's a church. Yeah, you can see Wesleyan Reform Union Church. So I guess they're going to change this and add a couple of extra stories on it. Hopefully get rid of this graffiti right here on that bottom window. Look, Google even Google blurred out the graffiti. It must have said something bad. Anyway, that's available, or it's going to be coming up on Assets Capital soon enough if you want to try to deploy your money. It looked like a decent project. Kuflink also has, let's see what they got. They got anything? No, Kuflink was Kuflink. I think I got this email late. This thing got filled quickly. Coppard Lane, 308,000 gone. Chapelgate, 107,000 gone. So not much there. We got a ton of live. Let's see, what do they have on their secondary market? They got anything? Nope, nothing on the secondary market. I have a couple of £100 just sat there doing nothing. So nothing to see there. Anything else? I think that's really about it. I was kind of going through the valuation on this Sheffield Assets Capital loan just to see the pictures and see what they're doing to that building. So you can see here. Market rent total when it's constructed, £104,000 a year. £104,650 per year total market rent. We are in the opinion that the projected market value, GDV, gross development value, as newly constructed will be £1.495 million. So if the facility is what, 985,000? Reasonable, as long as the valuations are correct. So I do have to take a quick look at I gotta look at the trading view markets right now just to see what's going on. It's been depressing. I've been a little depressed over the last couple of days watching everything melt. Ugh. I don't like it. Investing is no fun. Look at this. S&P down 1.2%. I think the FTSE's down about the same. Tesla was down about 5%. Now it's at 718. I put in a buy order at 680. Let's try to snag some of that price, but that did not fill. What's crazy, look at the pound getting weaker against the US dollar. 1.21. This was is that right? 1.21, I think so. This was at 1.31. So just a few weeks ago. So that really starting to fall. US dollar getting stronger. Look at that. Yeah, we were at just the 9th of March, 1.31. Look at this. 28th of May, 2021. US dollar to the pound was 141, so it's definitely falling. That means the pound is getting weaker against the dollar. Concerning. More people are heading to the safety of cash, which there is really no safety at the moment. That's the unfortunate thing. People are saying, oh God, look at the crypto market. It's melting down. And I'm saying, yeah, but where is the safe haven right now? There is none, unfortunately. Equities are not a safe haven. Bond market is getting smashed. Cryptos are getting smashed. Even gold. Here you go. You know, you think gold is safe? Look at this. 1822 down 1.57% today. We've been at a high of 2090, so we've lost $320 an ounce in gold. Cash is no safe haven because of inflation, so it's just putting us investors in a really difficult spot, and it's hard to know, you know, where to go. I think you just have to be a long-term investor and just continue on your strategy, stick to your plan, and know that, again, this will all just kind of play out the way it's supposed to play out. It's long-term. Everything will be fine. So, I'm kind of rambling a little bit today, I know, but it is what it is. It's a weird day on the markets. It's a weird day. Peer-to-peer lending may be a safe haven to get that yield. You look at a place like Loanpad, it's paying 4%. What do you want to do? You want to take your chances with cash at an 8% inflation rate. You want to put it in equities, risk that you could capitulate down 30% when a big correction happens. I think the best mix is a mix of everything. You know, again, diversify, have some cash, have some peer-to-peer lending, some cryptocurrencies for holding long term. Particularly Bitcoin, Ethereum. That's what I'm still doing myself. Try not to hold too much cash. HackyChat was having problems logging into Coinbase earlier. Okay, now. The owner bought a mansion for $130 million. Ugh. Who needs a mansion? You know, who needs... It's ridiculous. Don't even get me started. The impending slowdown should be a time to rebalance investors' peer-to-peer holdings. Hold a bit less. Very well spread out. Too many black swans about. Yeah, absolutely agree. 130 million. Ugh. Mike's still waiting for the 10th lending partner flagged in the recent SH update. Talk about Loanpad. Anyone investing with Nibble. Is that really an... I like that name. I've never heard of Nibble. Alright, Darren, I got your question, Philip. We're just going to go through these real quick. Planned offering, unsecured consumer lending, launching soon. Luna trading at 0.01p, down from 85 pounds a few weeks ago. Yep. That was one that I didn't invest in. Dave Dawson wants 7% or more really on the current rate of inflation. Look at legal and general shares as a comparison to try to judge risk reward on peer-to-peer. Legal and general. God, that's an old name. Legal and general. Let me see if they're on TradingView. Legal and general. They've come down quite a bit. I mean, yeah, these stocks are always just about timing, right? If you got in here, I guess you'd be okay. What is that? 191. If you bought in up here, you wouldn't be too happy. So that's February of 2019. So right now we're at 213. So we were at 213 back in May 2016. So yes, while these dividend stocks, Dave, I think in some cases are good. Just know the risk too that it is possible they can stay absolutely flat, because we've seen a 6-year flat from 2016. Also, if you happen to be unlucky and bought up here, you've seen a, what was that, 20% drop from 305 up here. While you do get the dividends, I'm sure they pay a pretty healthy dividends. And then if you look really long term and zoom out, yeah, you would have done totally fine if you'd have just bought and held right back from the very early days of this chart. So it's always good to zoom out when you're looking at stocks, for sure. Dividend stocks are not immune from capitulation and drops. So you see it right here. You've seen it right here. You know, a lot of people think dividend stocks are somehow safer. Not always. Went down from 305 down to 19. Well, low point right here, 185. So it's a healthy drop. So dividend stocks can get hit just like growth stocks can. So just be aware. I know you're all a lot more informed, probably than even me, so. They do pay good dividends. Just had a small slice of the Swindon property. An FCA rule that the full borrow rate has to be displayed. Crowd Property have just started doing it as well. Yeah, a lot of the companies still are not displaying it. Energy, pensions, and food are safe havens. Yeah, you just got to buy and hold on and know that you are going to have some downturns when this market does get smashed. It depends. If you've got a weak stomach, investing is tough. You know, people who have a weaker stomach tend to over diversify, and people who have more risk tolerance under diversify, and they can handle it. It just depends. If you have a really good income and you can afford to invest and not worry too much about the downsides, then you know you're in a really good position. Notice last few days email updates on Bolted selling off quite a few loan assets. I think that's pretty normal for them. They do that all the time. So a few unbolted loans under confidential investigation. Okay. I'll have to look into that. All right, I think that's going to do it. I don't have anything else for you this week. Hope you enjoyed the stream. We'll be back on Tuesday, all being well. God willing. I'll be here, 7:30 p.m. UK time. Hope you are too. Thanks for watching. Thanks for your support and letting YouTube know that you like this stream of absolute nonsense. No, not nonsense. Just information. But anyway, stay strong out there. Don't worry too much about the markets. Just keep your strategy plan going forward, as I know you will. And I will see you on Tuesday. Have a great weekend. Oh, it's the weekend. I'm so excited. I need this weekend to come quickly. It's almost here. Enjoy your weekend. Don't pet those black swans. And I'll see you next time. Take care. Bye.